Okay, let's unpack this. Today we're doing a deep dive into a country with just incredible natural potential. We're talking water resources.
We are Nepal, and its massive, mostly untapped hydropower capabilities.
Exactly. It's a topic with huge implications, for Nepal's future.
It really is. And the core question, looking at the sources we went through, is it actually viable? Can Nepal really pursue these huge hydropower megaprojects and become that regional energy hub they talk about?
And it's definitely not a simple yes or no, is it? The sources make that clear. It's not just, oh, they have lots of water.
No, not at all. It's tied up with Nepal's own internal challenges, the energy needs of its massive neighbors, India and Bangladesh.
And how foreign investors are looking at it, which seems to be pretty cautiously.
Very cautiously. So yeah, our mission here in this deep dive is to really dig into this source material you've given us, pull out the key insights.
Help you, the listener, understand what's driving all this. What did we learn? What jumped out?
Yeah, those aha moments that kind of piece it all together.
Okay, let's start with the big number. That sheer scale of Nepal's theoretical potential. Sources put it at a staggering 83,000 megawatts. MW.
Which is just huge. I mean, 1 megawatt powers hundreds of homes, so scale that up.
But then you get to what's considered, like, economically feasible.
Mm.
And the numbers vary, which is interesting itself.
It is. Some sources say, what, 42,000, 43,000 millibus? Others, like Nepal's own Water and Energy Commission Secretariat back in 2019.
Your study?
Yeah, that one. It was more conservative, around 32,700 milliW.
And the point the sources make is even that difference, which might sound small.
It translates into enormous differences in potential investment, future power generation. Getting a clear baseline number is, well, it's crucial for planning.
Absolutely. And then you compare any of those potential numbers to the current reality. It's quite a gap.
Huge gap. As of 2022, Nepal's total installed hydro capacity was only about 2,219 milliW.
Which is, what, 5 to 7% of even the lower feasible estimates?
Pretty much, just a tiny fraction. Historically, Nepal's energy mix, it's been heavy on traditional stuff.
Right, the sources showed that, like 2021 figures. 68% firewood, biomass.
Fossil fuels were 23%. And renewables, mostly the hydro we're talking about, only 9%.
And that explains those past energy crises the sources mentioned, the rolling blackouts.
Well, yeah, sometimes 16, 18 hours a day. It sounds awful. Domestic supply is better now, but...
But they still import quite a bit, about a third on average from India.
Yeah, especially for peak times or the dry season when the river flows are low. It really highlights that energy security issue they want hydro to fix.
And that brings us to something really critical the sources hit on, the seasonal imbalance.
Yes, most of what they have now is run-of-river, meaning power generation follows the water flow directly.
So tons of power during the monsoon.
Exactly. Then it plummets in the winter, the dry season.
Which creates this huge swing and really points to why they desperately need storage projects. Reservoirs.
Absolutely. To hold water back from the wet season and use it when it's dry. Gives you stable, year-round power.
And it makes things like energy banking with neighbors much more relevant. Trading power back and forth seasonally.
Definitely. Now, some sources mention this concern about rapid saturation of national demand, like Nepal might build too much too soon for its own needs.
Yeah, I saw that. But looking at other data in the sources, that feels maybe misleading.
I think so, too.
Yeah.
It probably doesn't factor in future growth enough. Economic modernization, EVs, electric kitchens, industry, plus the export plans.
Right. The demand projections under high growth scenarios are pretty massive. 41,264 gigawatt hours, GWH by 2030.
And then jumping to 115,294 GWH by 2040. And a GWH is 1,000,000 kilowatt hours, like on your home bill, just much bigger. So yeah, demand could really skyrocket.
So what's the takeaway from this first look? All this uncertainty around potential figures, demand forecasts, it must make planning hard.
And raising capital, definitely harder. You need consistent, clear data, broken down by scenarios maybe. That's what investors want to see.
So the focus needs to shift. Not just the headline potential number, but detailed, phased plans.
Exactly. Plans synchronized with demand growth and, crucially, getting the grid infrastructure built out alongside it, or even ahead.
Okay. So to make that big dream happen, becoming a regional hub, they need the big projects, the mega projects. Let's dive into what the sources say about some key ones. Arun River Basin first, eastern Nepal. Seems like a lot of Indian focus there.
That's right. Arun III, 900 milliW, that's the flagship, with SJVN, the Indian state company.
How's it going?
Well, physical progress seemed okay mid-2025, like 75–80% on the main bits. The main tunnel was finished June 2024, which is a big deal in construction.
But I saw notes about delays, pushing back the start date, the commercial operation date, C of D.
Yeah, exactly. The developer asked for an extension. It was March 2025. Now they're saying September 2026. Some sources hinted even later, maybe 27 or 28.
And that impacts things. The cost is around what? NPR 144 billion,
Well,
about 1.1 billion US dollars.
yep. Nepal gets 21.9% of the power free, plus royalties, and the whole thing transfers to Nepal after 25 years. But delays hit the project's bottom line, and delay when Nepal starts seeing export cash.
Makes sense. And Lower Rune, the 669 millibu one, also SJVN.
Also SJVN. Approved by Nepal's investment board, its progress is kind of tied to Arun III succeeding first.
Okay, moving west then. Karnali River Basin.
Yeah.
Upper Karnali, another 900 milliW, planned as a BOOT project. Build, own, operate, transfer.
Right, transfer after 25 years. But this one, serious funding problems, according to the sources, even with big names involved initially.
Who was that again?
The original joint venture had Indian firms IRETA and GMR, plus Nepal's own state utility, NEA. But the Reserve Bank of India actually rejected IRETA's request to put in equity, about 1.7 billion Indian rupees.
Wow, really? From a state-owned finance institution.
Yeah. They plan to resubmit, apparently, but it caused big wobbles. Talk of IRETA maybe even dropping out. GMR submitted a financial report Jan 2025, so maybe things are moving, but...
And the cost.
It was meant to be one of the cheaper ones, but delays mean the estimates climbed. Now around NPR 164 billion, over 1.2 billion US dollars.
The fact that even a project with major Indian state players involved hits funding walls like that must send a signal, right?
It's a definite red flag for other potential investors, a big warning sign.
Okay, what about the Seti River projects? West Seti and Seti River 6? That's in western Nepal too. Complex history there. The sources really detailed that.
Oh yeah, maybe the most complicated. We're talking West Seti at 750 milliW, Seti River 6 at 450 milliW, so 1,200 milliW combined.
And the plan now is with NHPC, another Indian state utility, signed in 2022.
That's the current plan. Estimated cost around $2.4 billion. But you have to look at the past. Before NHPC, Chinese companies were involved.
Right, CMSC first in 2009.
Then China, Three Gorges International, CTGI, took over in 2012. But they walked away in 2018.
Why did they pull out? The sources mentioned reasons.
Several things. Technical issues, yes, but also financial feasibility. They projected the IRR, the return on investment, at only 12.5%. They felt they needed 17%, plus high costs for land acquisition, resettlement. It just didn't add up for them.
So now NHPC is in. They submitted an initial study last year.
Yeah, 2023. The full detailed report, the DPR, is expected within 21 months of that. Nepal gets almost 22% free power. Rest goes to India.
So NHPC's big challenge is basically succeeding, where others, big international players, failed.
Pretty much. And we should note this huge project is different from that smaller 25 milliW Seti River project that was recently finished. Easy to get them confused.
Good point. Okay, then there's Booty Gandaki, 1,200 milliW, and it's a storage project, which is important, planned by Nepal's NEA.
Yes, storage is key. But the timeline and the sources for this one, it looks weird. Start date 2028, okay. But commissioning date listed as 2082.
2082? That's like a 50-year build time.
It seems completely unrealistic. Almost certainly a typo in the source material somewhere, but it does make you wonder about the accuracy of long-term planning documents sometimes.
Definitely raises an eyebrow. And this project also had issues with foreign partners before, right?
It did. China Gazuga Group had a license, but it was revoked in 2017. The reason given was it wasn't awarded through a competitive bid.
So issues with process, transparency, again, which spooks investors.
Exactly. And again, this big 1,200 milliW storage project is totally separate from a smaller 81 milliW Booty Gandaki Coca-Cola project. That one has a normal timeline. Start 26, commission 28.
Got it. And the sources briefly list other huge ones planned with India, like Pancheshwar, Saptakosi, showing the long-term scale of ambition.
Yeah, Pancheshwar is over 5,000 milliW. Saptakosi, 3,300 milliW. Arun 4, Phuket Karnali. The ambition is massive.
Okay, so looking at all these megaprojects together, what's the pattern? What are we seeing?
Delays seem common. Changes in who's developing them. West Seti, Booty Gandaki, financing struggles, Upper Karnali, timelines getting pushed back, Arun III.
And Indian companies are really dominant now in the pipeline.
They are, which provides that crucial market access, but it also brings risks, dependence on one main partner. These recurring problems, they suggest it's not just bad luck on one project, it points to deeper systemic issues in Nepal's hydro sector.
And delays cost money, like Upper Karnali's budget going up. Plus, it hurts Nepal's reputation, doesn't it?
Absolutely. It can become a vicious cycle. Problems put off diverse investors, then less competition maybe makes it harder to fix the underlying problems.
So what's needed?
Stability, predictability, simpler procedures, clear guarantees, sorting out land issues faster, and, this is huge, speeding up the build-out of transmission lines. They're often the bottleneck.
Okay, you mentioned transmission lines and export. The profitability of these huge projects really depends on selling the power outside Nepal.
Absolutely. That's the whole point of the scale. Nepal's location, right between India and Bangladesh, both needing energy, that's the core idea behind the regional hub strategy.
India is the main buyer historically.
Yeah.
And there was that big agreement in 2024.
Yes, a new long-term deal. India committed to buying up to 10,000 milliW from Nepal over 10 years. That's a significant commitment.
And they've actually started buying under that.
Yeah, actual exports hit around 1,000 milliW in the first year. So it's moving, it shows traction.
And India's own energy needs are growing steadily.
Consistently. Sources project 6.5% annual growth next 5 years, around 6.3% through 2030. Things like rising AC use push up peak demand. Plus, India already trades power across borders, buys from Bhutan, sells to Nepal, Bangladesh, Myanmar.
So that growing demand in India plus the 10 GW deal, that's a strong pull factor for developers. Market certainty.
Definitely provides incentive, yes. But relying so heavily on one buyer, India, it does carry risks, pricing power, regulatory shifts, politics.
Which is why Bangladesh seems so important.
Right.
For diversification.
Exactly. It's rapidly becoming that crucial second market. The big breakthrough was that trilateral deal, November 2024, finally allowing Nepal to send power through India to Bangladesh.
That was key, wasn't it? How much are they starting with?
Small scale initially, 40 milliW from Trishuli and Chalimi plants, just during the monsoon months, June to November.
And the price. Is it competitive?
Seems like it. Nepal gets 6.4 US cents per kilowatt. By the time it gets to Bangladesh, after India's transit fee, which is tiny, less than a tenth of a US cent per kilowatt and a trading margin, it's about 7.6 cents. Sources say that's attractive for Bangladesh compared to their other options.
And Bangladesh has big ambitions for Nepalese power.
Very big, aiming to import up to 9,000 milliW from Nepal by 2040. It fits their goal of 40% renewables by 2041. There's even talk of jointly developing a project, Sinkoshi 3.
So that potential volume really opens things up for Nepal, a second major customer, strengthens that regional hub idea beyond just India.
For sure. But all this export, India, Bangladesh, it all depends entirely on having the transmission lines in place.
Right. The cross-border infrastructure. Lines like the 400 kV Kalkabar-Muzaffarpur one are critical.
Vital for India exports and now for that Bangladesh transit too. And then there's the India-Bangladesh connection itself, Baharampur-Viramara.
But exporting 10 GW to India, potentially 9 GW to Bangladesh, that needs a lot more than what exists now, right?
Massive expansion needed, grid synchronization too. And we already saw with Aaron III, delays in building the transmission lines are already holding things back.
Are they talking about building more lines jointly?
Discussions are happening, yes, but without enough reliable transmission, that export potential is just stuck. Stranded assets, almost.
So the lines need to be built with, or even before, the power plants.
Ideally ahead, yes. Syncing that up is crucial.
And it's interesting how India plays this dual role main buyer, but also the only transit route to Bangladesh right now.
And they get a fee for that transit. It definitely gives India significant leverage in the region. These TL delays are a major bottleneck. Nepal needs to manage these relationships carefully, maybe look for other routes eventually, or get strategic funding for lines, maybe from a multilateral bank.
To boost its own security and independence a bit more. Makes sense. Okay, let's shift to the money. Attracting foreign investment. That's the cornerstone, isn't it? Yeah. But the sources suggest it's tough going. Investors are wary.
That's the picture painted. Yes, a challenging climate, leading to caution, even skepticism.
On the plus side, you've got the huge potential, the growing regional demand, government saying it's a priority, potentially high returns if it works out.
True. Those are the pull factors. But the sources list a lot of serious concerns, risks that seem to often outweigh the positives for investors.
Like what? What are the big ones?
Just the slow pace of the sector developing overall, big problems with regulations, bureaucracy, approvals, licenses, permits. described as complex, long, not always transparent. Huge hurdles.
Infrastructure still lacking, especially transmission lines.
Critically insufficient and delayed TLs, yes. Also roads, logistics. Then there's the legacy of past political instability. Even though the Civil War is over, Nepal's still an LDC least developed country, which comes with perceived risks.
High upfront costs, long time to get money back.
Exactly. And the World Bank reports mentioned in the sources, they flagged things like weak competition in transport, making costs higher, and even questions about the government's absorptive capacity, its ability to effectively use large amounts of aid or investment.
So investors are weighing all this up. And past negative experiences don't help.
They definitely make them more cautious. Let's break down those risks a bit more. Political risk. Policy changes with new governments. General uncertainty.
Regulatory risk. Lack of transparency. Things taking forever. Rules changing after the fact. Hassles with licenses, tariffs, the power purchase agreements, the PPAs.
Right. The World Bank keeps stressing the need for a stronger legal framework, cutting that red tape. Financially, we saw the struggle to get long-term debt and equity with Upper Karnali-Areta. Currency risks. Worries about PPA profitability. Even the financial health of NEA, the state utility, mentioned in some audit reports.
And operationally, building in the mountains is tough.
Very tough. Land acquisition, resettlement issues are often huge problems. Logistics, finding enough skilled workers. And construction delays, commissioning delays.
And this history of failures really hangs over things, doesn't it? Investors leaving.
It really does. The sources emphasize the Chinese exits. CTGI walking away from West Seti in 2018 is a major one, citing financial reasons, low IRR, high costs, not just technical stuff.
And Gazuba Group losing the Budi Gandaki license in 2017 because it wasn't a competitive bid.
Exactly. Plus, very little involvement from others, like Russia historically, and even the Indian-led projects we talked about, Arun III, Upper Karnali, facing significant problems.
So these aren't just isolated incidents, they create precedents.
Negative precedents. They make new investors demand much more thorough studies, total transparency, really conservative financial models before they'll even consider committing.
So the overall picture is, despite the resource, despite the demand next door, Nepal struggles with investor confidence.
Seems to be the case. It's this combination. Political, regulatory, infrastructure, financial risks, all amplified by those past failures, especially on big, visible projects like West Seti. There's a gap between the government's goals and the reality investors perceive on the ground.
And the World Bank reports keep pointing to the same structural problems needing systemic fixes.
Consistently. And this lack of confidence has real costs for Nepal. They might have to offer sweeter deals in PPAs, more guarantees, which eats into Nepal's profit share and increases fiscal risks for the government.
Or they become dependent on just a few investors, like the Indian state firms.
Which can happen, and their interests might not always perfectly match Nepal's long-term national interests. To change this, Nepal needs real action, not just talk, an independent regulator, radically simpler procedures, contract certainty, fixing those infrastructure bottlenecks, especially transmission.
Without those fundamental changes, attracting diverse, quality investment looks really hard.
And the profitability of even good projects gets questioned because investors factor in a high-risk premium for working there.
Okay, so let's talk viability directly, assessing if these projects actually make economic sense. It's about balancing all these factors we've discussed.
Absolutely. Construction costs are key. They're high in Nepal terrain, logistics, imports, and they often go over budget because of delays, changes. Upper Karnali's cost jump is a prime example.
Financing conditions, too. Can they get the loans, the equity?
Yeah.
At what cost? The IRETA issue showed how that can stop a project cold or make it much more expensive.
Then the tariffs and PPAs, the price they sell the power for. That's the revenue. The 6.4 cents to Bangladesh looks okay. India's 10 GW deal offers volume certainty. Domestic prices matter, too.
And deadlines. Delays are viability killers,
Will
right?
directly impact the financials. NPV, IRR, net present value, internal rate of return, basic measures of profitability. Delays push costs up, push revenue further out. Hurts both.
Reliability of the buyers, India and Bangladesh, matters hugely, too. Need stable demand, financially healthy buyers for decades.
And finally, government support back in Nepal. Guarantees, tax breaks, stable rules. These lower investor risk make projects look much better on paper.
Which brings us back to that critical link the sources highlighted between domestic needs, export markets, and investor confidence.
Yes, meeting Nepal's own needs is important, provides a baseload, energy security.
But these mega projects produce way more than Nepal needs, at least for now. Their economics depend almost totally on exports.
And those big export markets, India and Bangladesh, are the main reason foreign investors are interested in funding these huge projects in the first place. No export prospects, no mega projects.
And this is the catch-22, isn't it? Realizing those export opportunities is super hard without getting investors confident enough to build the projects.
Exactly. And investor confidence circles right back to Nepal, creating that stable, predictable, favorable investment climate inside Nepal.
So it's like a chain. Viability depends on export, depends on investment, depends on the climate in Nepal.
That's the interdependence the sources reveal. Unless Nepal builds that trust through real reforms, it can't unlock the export potential. So the profitability of many of these ambitious projects, it remains a big question mark, despite the water and the demand next door.
So wrapping this up, Nepal's hydropower sector. Huge potential, definitely at a turning point maybe, but realizing it, making these big projects truly viable, faces some really serious, deep-seated challenges.
Requires a coordinated strategic push. To recap the key findings from the sources, vast potential, yes, but way underused. Slow development due to systemic problems. Megaprojects are key for exports, but profitability is uncertain costs. Financing, prices, delays, all play a part.
Regional markets offer the demand, but need reliable access infrastructure, trade deals.
And the biggest hurdle, investor caution. Driven by that whole mix of risks, political, regulatory, infrastructure, financial, plus that negative history.
So what are the concrete recommendations? What can Nepal do to actually improve profitability and attract investment? The sources, the World Bank reports, they point towards.
Fundamentally improving the investment climate. Less bureaucracy, more transparency, predictability, rule of law, contract stability. Actually doing what those reports recommend.
And infrastructure first. Proactive development.
Non-negotiable. Prioritize transmission lines, domestic and cross-border, transport logistics too, build it ahead of the power plants ideally. Also, strengthening institutions like NEA management, finances, capacity to handle these huge deals.
Diversifying partners and markets seems smart too. Reduces dependency.
Yes, and realistic planning. Careful project prep. Thorough feasibility studies, conservative financials, learning from WestSETI, not repeating mistakes.
More storage projects to tackle that seasonal issue, improve reliability.
Definitely key for stable supply and better export prices. And alongside exports, keep building the domestic market. Electrification of transport, industry, homes creates a stronger base.
So it really feels like Nepal faces a clear choice. Leverage this amazing resource for growth and prosperity.
Or risk it staying locked in potential because of these persistent internal barriers. The success or failure, of these current big projects are in the third finishing, WestSETI, Upper Karnali actually moving forward. That's the test case. That's a signal global investors will be watching.
So the final thought for you listening. The profitability of Nepal's hydro dream isn't just about engineering or finding buyers.
No. The sources make it clear it's fundamentally about Nepal's own ability to create and critically maintain a stable, predictable, transparent investment climate. That's what will turn water into tangible economic benefits for the country.